Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. We are watching what's happening in the markets, in the economy. I'll bring that all together today for you. The first thing I want to look at is the stinky stocks. What's been happening? You're going to get the updates there. The second thing is the inflation madness. Of course, you know when you go to the store and you've got to pay more and more and more for just about everything, well, it goes a level deeper. The third thing I want to look at is Poland dropping Russia. And this is so key because we could start a chain reaction. All of that and more. Let's begin. You can see that stocks sink as inflation recession fears rattle Wall Street. This has been a theme all along. Now, this article happens to be written on April 26th, but I could have showed you the exact same thing from March and probably from February and January on and on. It's the same theme. I did a video before that was 60 seconds long. If you type into a search engine, the Money GPS 60 seconds, you're going to see it for yourself. And it basically tells you how to be able to predict the stock market. Let me just tell you, you don't have to watch the video if you don't want to, if you don't have that 60 seconds to invest. This basically just follow what the central banks do. Okay, and then there's a 40-second video, which basically says largely the same thing. Look at what the central banks are doing to find out the direction. Okay, so we know that if they're pulling out all the support, of course they're going to have problems, right? Higher interest rates raise borrowing costs for consumers and businesses, which can hinder business investment and shrink corporate profit margins. Stocks often fall as the Fed is raising interest rates, particularly when investors fear that the bank may need to hike quicker than they currently anticipate or higher than investors had expected. So we can see that they're going in this direction, increasing interest rates. That's having an impact, and the markets are not liking it. We can see that very clearly. But if we take a look deep into the actual market itself, it isn't so linear. So these are the four broad indexes in the United States. You could see the S&P 500, Dow Jones, the NASDAQ, and the Russell. Okay, go through all of those and you see that, well, technically it's actually a little bit oversold. It's looking weak. And why? Because of the concerns. Those are there. But throughout this period, there's more nuance to it. You could see that the concerns have added up every single day as we get more and more information from these central banks leading into the May meeting. That's so key. I saw some people that were saying, I'm going to buy the dip. I'm getting it. I'm putting these millions in there. I'm putting those millions in there. They were so heroic to their subscribers on their channel. And those people have actually lost money at this time because they bought in at the wrong moment. This happens to be ARK. Now, I'm not beating down on Cathie Wood. I think Cathie Wood is just like Jim Cramer. I think she's just like all the others who are always there, rah, rah, cheering, doing this whole cheerleader thing, and it's not anything to do with the fundamentals. Take a look at ARK. This is just an example. So this right here is that March 2020 timeframe where the markets were coming down like crazy. And it bottomed out. This is a weekly chart for ARK. It bottoms out in March 2020, let's just say, round it off, and it peaks out in February 2021. So largely, that's about a year, and it's going up basically in a straight line from a bottom of 33 to a top of about 160. Massive, right? And now erasing all of the gains from that entire period. What does that tell you about the investing philosophy that has been put into place right here? It's that it doesn't always go up. We could come back to ARK in 5 years or 10 years from now and see that it is higher. That's possible. Absolutely. But is it higher always? No. And anybody who invested throughout this period has lost all of their cash. I mean, we could do this. What is it? Robinhood. Alrighty. It is at the lowest it's ever been. Okay. That's Robinhood. I mean, just take another example. Peloton. All right. Peloton. It is at the same level it was at, basically ever. Looking at this right now. Just name a stock. Okay, I don't want to do this all day. You can see where I'm going with that. What's happening? Well, the world is facing the biggest energy shock since the 1970s, according to the World Bank. But you didn't need to hear from the World Bank or the IMF or any of these other criminal supranational entities. You could see this in real life. Go to the store, go to fill up your tank. It's unbelievable, okay? More people are saying, I'm going to avoid this, I'm going to avoid that. And what does that do? Well, of course, that creates demand destruction, but not enough demand destruction yet. Well, that's why if you look at China as a prime example, this is concerning. Everything is halted. Shanghai shutdowns are worsening the shortages. The challenges will probably contribute to higher inflation, but will come at a time when demand is waning for many items. So we will see how this back and forth goes over the next little while. You've got stocks like this. This happens to be Robinhood, and people don't get this. This is the whole connection, okay? If you stayed this far into the video, you get it. What happens when these stocks start to go down? It's not a simple matter of, oh, all right, Federal Reserve turns on the printing presses, we're good to go. This is one example. They fired not letting go. Okay, the quote here is letting go 9% of the full-time employees. No, they were fired. Okay, these people were fired. And that's 9%. This is just one company. But what happens over time and over time? Well, we see this. The companies, their stocks start to drop, they let people go, they fire people. That's why the stock market is important to the real individuals. But take it a step further. Bank of America sounding the alarm on collapsing freight demand. Demand for truckers is at a 22-month low. So there's huge changes, big swings, and I do not believe that this is very linear. Okay, because I can go to one place and say the demand is so hot, and I can go over here and say that's not the case at all. Part of the problem is getting products to the port, getting them from the port onto the trucks. If there is a simple bottleneck and that stuff just doesn't come fast enough, even though technically that all that stuff coming from China or overseas or wherever, even though it wants to be, let's say, at the different US ports, if it can't get there, well, then you got an issue, right? All right. Here is one thing that's been going up, and that is the dollar. Okay, the dollar versus its peers, not against real goods, versus its peers, it bottomed out right here in 2021. It's been heading higher ever since, okay? So I think that's key to watch. In relation to its peers, not important necessarily, but it shows you where the money is flowing to. This, of course, is the put-call ratio. What does that mean? Essentially, how many people are buying into, well, a put is basically betting that the market's going to go down. A call is betting that the market's going to go up. And right now we see more people getting into puts. So investors buying that tells you something about what they believe is going to happen. The only trouble is, usually when they end up loading up a lot, the market tends to reverse. So we'll see what happens, okay? At that time, and at this time, that hasn't happened. Whirlpool. So the CEO does an interview and basically says, hey, we got a bad inflation, but we're handling it. Everything's going to be just fine. Don't worry about it. And they've actually said that things are easing, where I personally haven't found that. And I've seen a lot to disagree with that. But that's what the Whirlpool CEO is saying today. Tesla stock plunge wipes out $114 billion in value. His Twitter deal sparks fear. They're saying, yeah, well, Elon Musk is going to take his attention and time away from Tesla. They make a lot of different claims. My opinion, this is all the central theme of what's happening, and we see the froth coming out. That's the real story. But they don't want to tell you that, okay? What about Tesla? Let's look at that. Oops. Let's look. Okay, this is a weekly chart again, 876. So we have come way off the top. So we saw this bounce that took place, okay? The stock was at approximately 700. It bounces up to 1150 almost, and now it is down to 876. This is a wild ride. There is no doubt, however, that this stock has really been able to come up. I mean, it defied gravity, it's defied everything. Okay, but what happens here? We see a lot of froth. A lot of people made a lot of money in this stock. And when we see the fear coming in, well, then it could leave real fast. This I thought was just funny in a sense. This is Manchin saying debt reduction is the only way to fight inflation. He wants to see the corporate rate go to 25% and loopholes to be closed. We will see what happens here. Debt reduction. They're also talking about doing a massive infrastructure bill and so on, but nothing about like the reason why all of this has happened. I mean, it's crazy. Okay, let's talk about Poland right now. What we are looking at this time, at this moment, is important because with Russia, with Ukraine, it's bringing the whole world around. Poland sanctions Gazprom among 50 Russian firms and oligarchs. So Poland's taking it a step further than most of these other places. And you've got this gas flowing through. You've got the pipeline set up, like just like Ukraine. A lot of the pipelines go through Ukraine. Reports: Russia has reportedly suspended natural gas supplies to Poland. 55% of Poland's gas imports come from Russia. Reports: Russians did not inform the Polish side about the reasons for the suspension of deliveries. So I don't know what's going on. I always say this all the time, and I shouldn't have to say this. I personally don't know what's happening. I bring you the news and I try to bring it from all different sources, literally all different sources from all around the world. Some are better than others. I know that. But I just bring it to you and hopefully we can make something from this. Poland's largest news portal, Onet, reports that the Polish state-controlled oil and gas company PGNiG is holding a crisis meeting. Poland is one of the countries that has refused to pay for gas in rubles. That, my friends, is big because Russia said, you want to do business with us? Well, that's fine. That's great. Let's do it in rubles since we're sanctioned on the other, method of doing so. Imagine like imagine a road and a highway that you needed to drive on. And there's this big thing blocking it. No, can't go through there. And you're saying, well, I'm ready. I'm ready to drive there. No, you can't do that. And that's what's happening right now. Okay, that's SWIFT. That's a SWIFT system. So what they're saying is pay in rubles, we're all good. But clearly there's been this back and forth and there has been some turbulence. Polish gas companies say that Russia's to halt gas deliveries from April 27th. Okay, same info. And then this is just some news in here if you want to read about that. What we are looking at today, I believe, is concerning, not just for, let's say, the price of oil or energy and so on, but these tensions seem to be ratcheting up higher and higher. I mean, I wasn't going to even show this one, but let's do it anyway. Russian foreign minister warns, do not underestimate the threat of nuclear war. I mean, here we go. We're just, this is not going to help anybody. That's all I'm going to say. But obviously, this is what they do. This is what countries do. This is what we see all the time. The rhetoric continues to increase. Are we going to see this backing off? Many people had said, this is going to be a quick one. This is going to be just a month, maybe a few weeks. It would be tactical. That doesn't seem to be the case. So I'm just looking at this from all angles. If you appreciate the information, hit that thumbs up button. I've been talking a mile a minute. So I want to thank you for being on this one. I had so much more to say. But if you haven't already, follow me on Twitter if you want to get some updates. I've noticed a whole bunch of people were following me on there now, just recently, and I've been throwing out some information. So it used to be just me posting my video on there just to kind of get the word out that way. But now I'm actually doing unique information. So if you want to check that out, just search for the Money GPS on Twitter, and you don't have to have a Twitter account. You could just type in the Money GPS Twitter and you will see that. So also, don't forget to subscribe to the channel if you haven't already. I'll see you on the next one. Take care.